What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. Today, we will be going through the stock picks from last night as well as some action on SPY. So, if you're ready, let's step into the war zone. All right. So, first, let's go ahead and tweet this out. Let everybody know we're live. I want to talk about the gap and go. So, to learn how to trade gap and go. Boom. Let's get that over there. And actually, the gap and go play today was Pfizer. So we're going to talk about this one right here. Really clean gap up. And I want to show you guys some strategies with the gap and go. It's one of the, old school strategies, been around forever. But I have a little twist on it to do it my way. And I want to share that with you guys today. All right. So first, why don't you let me know where you're tuning in from tonight? Hit me with the Trading Wars Army, Trading Wars VIP, Trading Wars Spy if you're in the building, and we're going to get into this, okay? And while you guys are doing that, let's make sure to look at Pfizer on the daily chart before we get into this. So Double D, what's going on, brother? Peace and love from Patterson, New Jersey. What's going on, brother? Appreciate that. Adriana, Trading Wars Army. Melly, Trading Wars Army. Double D, Trading Wars Army. What's going on? Todd, Santa Rosa, what's going on? Michael, Trading Wars Army. Appreciate you, brother. David, California. YM, Miami. Lazarza, Trading Wars Army, what's going on? Alicia, Trading Wars Army. Patrick, Austin, Texas, what's going on, brother? All right, let's do one more. Boom. And Natalie from New York, what's going on? All right, so let's hit the replay. Boom. All right, so what pattern is this on the daily chart for Pfizer? Let's start off there, right? So Pfizer, we've been watching it for a while. Remember what I was telling you guys, that, this thing is in an uptrend and we had a nice little pullback here, right? And we were right on this mid-Bollinger Band 20 EMA. The first time Pfizer came to our watch list was from this inside bar. And then the very next day, which was Friday, we had an outside bar. So what pattern is this one, guys? Tell me. And while we're doing that, I'm going to pull up the book. So yes, this is the Trading Wars Nirvana pattern, right? Inside, outside. Very powerful pattern, guys. The indicator is only for people that purchase my book, all right? So I have this for all my members, but I love this pattern. We can see the last time we had a Nirvana on Pfizer was on the 14th of September. We had a nice push down there. Let's see when we had another one. Back here in June 2021, we had a big rally from there. And then this one was a little bit chop in April. So these patterns right here give us an edge, because what it's trying to tell us here, this pattern is trying to tell us that we have a lot of traps. Let's go down to the 5-minute chart and let's look at it in detail. Well, we can see here, guys, just look at the price action on Friday. We had bears that were trapped, right? Because we gapped down, but as soon as we gapped down, we just recovered, we rallied. So anyone that was shorting down here, guys, they're in trouble. Anyone that shorted up here was in trouble. And right off the bat, the bears are going into Monday, they're in underwater, right? Because every time they try to short, the dip keeps getting bought up. So with that in mind, first bar comes in today. Let's go on to the 3-minute chart, because I like starting off there. Boom. First candle comes in today, and look at the significance of this candle. You can see this white line is the previous Friday's high, which right around here. Let me just adjust this a little bit. So you can see we're clearly gapping up above all of this resistance, right? Look at all these resistance here. Bam, 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 bam. And we know the shorts were already trapped on Friday. So what do you guys think is happening right here on the open, on the 3-minute? Who is in trouble right now on that 3-minute chart? Who is going to be in trouble? So especially when we have a big gap over the previous day's high, we generally can see that someone's going to be trapped. Could be the bears, could be the bulls, it could be both, right? Because but if we just look at the details of this chart from Friday, we can see that these dip buys are stepping in. A lot of bulls are being trapped. So we gap up here, and the bears are definitely sweating right now. They're in trouble. They don't know what to do. So with this big gap up, the way that we can play this right here, guys, is we could take the orbs opening range breakout. So 3-minute opening range breakout, 5-minute opening range breakout, and 15-minute opening range breakout. Those are the 3 time frames that I like to choose. There we go, guys. Right after the next candle, triggered long, bam, more push, more push, more push. There we go. Beautiful winner. Okay. So the calls on these doubled. All right. if you missed the opening range breakout, there was a tight inside bar here on the 3-minute. That was a nice one. Let's go to the 5. 5, beautiful opening range breakout, another winner. And then the 15, beautiful opening range breakout, another winner. So very, very clean. And that's what I really like to do on significant gaps, is just try the opening range breakout. It's not always going to work. Don't get me wrong. It's not always going to work. A lot of times it's either we're going to go aggressively like this. Like we had this on SPY the other day. Let me pull up SPY. I'll show you. We took this one last week on SPY right here, right? So this was last week on SPY. We had the gap up, same kind of concept. We broke through the high and we pushed, right? So that was a nice opening range breakout. So same thing on Pfizer. The other thing that could happen on a gap up is we could fill the gap. And when we fill the gap, guys, the general strategy that I like to use is the gap fill. And the gap fill, I've talked about it in many other videos. I like using the Fibonacci with the gap to buy that fill. But always worth a shot generally on these big gaps to try the opening range breakout, because it's always, you always have good risk to reward. So let me just let this 5-minute play out. Beautiful. Okay. So we had, once a gap going here, pretty much after that, we kind of go flat, right? And that's really what happens with a lot of these picks, is as soon as it has a big morning push, you can expect us to kind of go sideways into the afternoon and kind of do an afternoon leg push. And what I mean by that is if we take the Fibonacci from the low to the high right here, guys, and we spread it out, you can see that later on in the day, we do pull back. We start using these fibs as support to take us back into the close. All right. So that was 100%, guys. So that's the Nirvana pattern right there. Beautiful. So that's why we, in Trading Wars, we always start off with the precondition from the daily chart. We need a reason to take a stock trade. We don't want to just take every single trade. The only time we take all the setups is when we trade SPY, because SPY usually has opportunities every single day. But these stocks, you want to be patient and you want to wait for your pattern, your setup, your plays. All right. So hit me with a 1 if that makes sense. Pretty great pick today. Hit me with a 1. Hit me with the Trading Wars Army as well. That was Pfizer. Beauty. So the next thing I want to talk about is Disney and AT&T. Okay, so I want to talk about those two. So Disney and AT&T, these were great triggers, plays. So T also had a great opening range breakout, but let's do these together. So if I go into the Discord here, I'm going to show you guys. I post for every day. I have, what is this? Hey, hi. Got it. Every day we have triggers. Okay, triggers is a very simple way to automate your trades. So here we go. This was the one I posted last night for the picks today. So we had Pfizer, Disney, AT&T, Comcast, and Dash. Dash is a bonus pick. So let's focus on Pfizer and Disney because, Disney and T. Pfizer gapped up. So once it gaps up, then we always go back to the orb and the fractals. So that one, the trigger is not going to work because we gapped up above the trigger, right? But for Disney and T, we opened in the range and these triggers were tagged. So let's go ahead and look at it. Let's start off with T. So T, the short trigger right here, guys, was 2278 and the target was 2270. I'm going to go ahead and draw that. So what we got to do here, let's go back to the daily chart so we can see what was going on, right? So we had a tight little inside bar on Friday. So that's why AT&T came up on our list, right? And AT&T has been in a downtrend for a long time. We can see this, right? It's been a downtrend for a long time. So we had that little inside bar. And what we're looking here for this inside bar is like, look, if we could look back in time, we see this double inside bar. We had that breakdown. We're trying to look for something similar. So we go on to the 5-minute chart. The first white line is our entry short. And then this white line is our target, the first target. And then from there, you scale out, stops to break even, let the remainder of the position work. So go to the 1-minute chart right here. We can see this in detail. Right here. Bam. Okay. So this is a very beautiful trade, guys, because within 1 minute, we get filled and hit the target within 1 minute. It's actually, when I see trades work like this, it just makes me so happy because this is the power of automation, right? I already knew where I wanted to get in short right here on this white line. I already knew where my target was for the first part. So very, very high probability trade here. We open down here, we retest, okay? So we retest this level and we roll over. If we go down to a lower time frame, maybe like a 15-second, we can see it even better. So there you go. So look at this, guys. This is a 15-second chart. So let's pause on this one for a second. If we look at this 15-second chart, guys, you can see we open, we tag our entry short, and then we also have an inside bar in the 15-second chart. Isn't that impressive? 15-second chart inside bar, bam, down to the target. That's really, really crazy. Who wants this? Who wants to start backtesting 15-second inside bars? Anybody want to do that? Let me know. Anybody want to backtest 15-second inside bars? Who's that fast in here? Can you even execute within 15 seconds? Let's see SPY today. Let's look at this. I just wanted to see this just for fun. Let's see how that 15-second chart worked. We might be onto something here, guys. So check this out. 15-second chart, guys. Ragnarok. Look at that. Inside, outside, inside. 15-second Ragnarok. Bam. Winner. Outside bar. Winner. Double outside bar. Check this out, guys. Double outside bar. Bam. That's a winner too. And that's all within 7 minutes. It's pretty insane, eh? Just crazy, man. There's so many opportunities to trade. So many opportunities, guys. But anyways, so we go here through AT&T. Bam. Okay, so this was a big time play for us because, guys, our entry was there. First target was there. That's a big winner. Stop is right up here. So that was beautiful. Disney. So even if you didn't take the trigger, you could have taken the opening range breakout on AT&T. You could see, right? We had all this support here, and then we just took it out. Bam. Beautiful flush. Next, we had Disney. So Disney, we had a trigger as well, a short trigger. I'm going to go and show you. Disney short plan 151.77. So right here, 151.77. So right here on Disney, we hang around the trigger for a little bit and then we flush down there. So the orb was not a winner, but the trigger was great. It paid really, really well today. So stocks have been really good today. Very, very good. All three of those winners. And then Comcast, you'll see, was a winner as well. This is the last one. And beautiful opening range breakout with a big long tail on the top. Take it down. Bam. One leg, two leg. Remember what we say? How many legs can we expect in the market before reversal? 2, right? So here's your first leg. Look at this. Look how beautiful this is, like science. Okay, check this out. We have the arrow. Let me get the arrow. So we have this push down. We pull back to the 382 exactly. You see that, guys? 382 exactly. We have outside bar here. Then we trade exactly to the 272 extension where we have a reversal. And that's kind of what you're looking for. 1, 2 push, and you're out generally. So there could be more, but you have a good chance of taking your profits with the 2-leg strategy. So that's what I like to use. Really nice. Really, really nice. And I'm very happy with that, guys. And then AMD was a swing trade. So just going to give you guys some updates on swing trades. You know, a lot of you guys don't have the patience for this, but a lot of you guys need to be doing swing trades. And I'll tell you why. The reason is because you need, sometimes a lot of you are too micromanaged and you need to let the trade play out. You see what I'm saying? You need to let it play out. So here we go. This is the weekly outside bar for AMD. Our entry was right here at 143.20 short, and our stop loss was 152.67. And as you can see, guys, today we hit 1-to-1 on our target. We broke down. It took a little, see, last week we got chopped up a little bit, but then you got to be patient because now we hit the target. You see that? And let's be honest here. How many of you guys, when you had this little push back up and you started to see your trade going red, how many of you would have closed the position? Be honest. Hit me with a 1 if you would have closed the position. Hit me with a 2 if you would have stick with the plan. Honestly. And that's why I love swing trading, because you just do it, you put it away, you let it do its thing, and you walk away, right? That's what the strategy is. And that's why a lot of people can't do it, because they want to micromanage every single trade. You have to have trades that you let them work. Otherwise, you're not going to make money. Brother Double D said he took the AMC weekly inside bar. Let's see. Beautiful. Yep. So this is one of the picks that I posted in my free, on my YouTube, the free picks. So this brother right here took the inside bar and AMC weekly inside, and it's paying. See that, guys? Look how clean that is. Here's your weekly inside bar breakdown. Bam, gone. Beautiful. Okay. All right. Hit me with a 4 if you're following me so far. Hit me with a 4 for the 4 horsemen. and we will continue with SPY. All right, cool. All right, so let's go here. Let's go ahead with SPY. Go to the daily. How many weeks to expiration do you usually allow on swings? Generally about 2 weeks. Generally about 2 weeks. If I'm more aggressive, I'll do 1 week, but generally about 2 weeks. All right, so we're gonna go ahead and hit the replay on SPY today. Boom. So SPY was not the easiest today. I did not take the opening range breakout, which you'll see in hindsight was a great trade, but I try to stick to my rules, guys, as best as I can. You know, sometimes you're not going to get every single play. So right off the bat, guys, first 5-minute bar, boom. So we had a beautiful opening range breakout actually here. It took a little bit of time to work, but it did. And I did not take the opening range breakout, guys, because we were opening inside. In hindsight, I wish I did, but you know, I'm not gonna sit here and like just change my strategy because it's not, you know, I'm doing based on the probabilities, right? So what we did after that, guys, is we played these fibs, and I think if I go down to a lower time frame, you'll be able to see it, right? So here we go. So what the first thing that I was looking at, guys, we actually had a trigger long, and the trigger long was immediate stop out. So there was no hope with that one. Here on the 1-minute chart, guys, started playing these bounces off the fib. So we had the 50% here, which had a great pop. Nothing huge, but we still were able to take a good pop on the 50. And then when we came to the 618 right here, okay, so that was the pop on the 50, okay, and then we came back down, test the 618. When we come back down to the 618, we had another great pop. So two pretty much decent scalps, right? Like you can see that 50, 618, nothing amazing. And then we started to roll over here, guys. You'll see, started to roll over, right? And you can see like every time we're tagging these fibs, we're getting pops, right? So that's kind of one of the things I like to use with the previous day's range with the fibs. I like to try and go in there and get pops, right? I try to get pops. And then from there, we had a nice holy grail. So this holy grail pattern set up here, guys, and we got a great push down here with the holy right there. See, so that was a good 1-to-1 on the holy grail. And then from there, we came back with the inside bar reversal on a double bottom right there. So we had you see this, guys, it's a clean double bottom with that inside bar reversal. And then from there, that took us back up on the day. Okay. So it was like there was no big winners, none, just little plays. And I feel like more and more of that is going to start happening now because of the fact that we're trading into the holiday season. So more and more of like sideways action is going to start happening. You got to be careful because you can see, right? Check this out. Here's the previous day's high. Here's the previous day's low. Even though we don't have an inside day, we're still staying pretty trapped within the range. And that's going to kill option premiums for sure, right? That's going to kill premiums. And that's kind of what holiday trading looks like. Like, look at these last few days, guys. We can start off from the gap up that we made money on. Look at this. Basically in this range, right? So when you have this type of range, is difficult to make huge winners, but you can still scalp and hit those fibs. That's what I like doing. And yeah, so nothing exceptional. I wish there was more, but there was not. Anyways, so hit me with a 1 if you guys follow me there on SPY. I will say definitely though, like there was a lot more action on the stocks like Disney, AT&T, Pfizer, Comcast. Like there was a lot more clean moves right off the bat, especially with the triggers. You can see the triggers, bam, good flushes through. Whereas SPY was a little bit more tough today. Beautiful, guys, beautiful. What else did I want to say today? So we did How to Trade SPY for a Living Part 3 yesterday, guys. I want to thank you very much for your time and for watching it. We got 200 likes, 1,500 views already, 27 comments. Pretty good because we just did it yesterday. A reminder that I'm trying to get a goal of 500 likes and 100 comments This was a great video. We talked about risk management, position sizing. So don't forget to check that out if you haven't already. And like you guys know, I'm working on the SPY book right now with Derry. And I'm just going to show you guys a few examples of some charts. Let me know what you guys think. So I'm going to take this. I'm going to bring this over right now. We're trying to find a balance between how much to write on a chart and how much to just keep, like just to, not to overwhelm. But can you guys do me a favor right now and read this for me? This is an example of one of the charts that I want to put in the book, and let me know what you guys think. Is this good? Is this too much? Is this easy to understand? Should we try to keep the wording a little less, or do you like this details? Do these details help you to be better with your trading? So take a second to read this. Hit me with a 1 if you hit me with a 1 that if you like this and this is a good format. Hit me with a 2 if you think we should tone it down. Did you create the indicators that you're using? Yes. So here's an example of a gap up. Opening range breakout is only applicable at market open. 930 candles are bench. So that's just saying that we don't trade the pre-market. 930 candles are benchmark because we entered the trade utilizing the opening range breakout once our conditions are met, such as a gap, ideal break of the 930 candle. These conditions are visually represented via push. We receive post breakout. So you see this push right up here. That's how you can see that the opening range breakout has succeeded, right? And what we do is just the high and the low. Break the high long, break the low short. Utilize the breakout as your entry for the push. Recall the push is not guaranteed as nothing's 100% in the market, right? That's just a reminder, okay? Just a reminder. But, I feel like a little bit more details on the charts would be good, like we're doing right now. And this is the same thing. This is like a gap and go strategy. All right, that's great. All right, last thing, guys. If you want to sign up for the book, the pre-release, what you got to do, just sign up right here. So this is the priority list. Anyone that signs up using the priority list is going to get 10% off, and they're going to get the book before everybody else, okay? So if you're interested, just click on this form right here, guys, and just fill out your details, email and your name. And I'm going to send you guys a special link with that discount for you guys that have been supporting me on the stream. I appreciate you guys, right? So I don't know, for the SPY book, we have a goal of at least 50 charts. We might try to push it a little bit more. I don't want to just like have a 300-page book of just charts, but we're going to try to have a good balance for you guys. All right. So there we go, guys. I'm about to add some more swing trades on going into tomorrow. So I'm about to go into the broker and do the work and, set up some new trades for the stock room. But otherwise than that, I appreciate you guys. I appreciate your time. And we'll keep going. Just keep trading simple as much as you can. Trade a bar by bar approach. Triggers, if you want to take triggers, they're beautiful. You just want to go ahead and try to automate those the best as you can. All right. So before we leave, any Trading Wars Army members with any chart requests or any questions? Any Trading Wars Army members with any chart requests or any questions before we leave? I'll take care of you guys there. Walmart. Okay. Go to daily. So Walmart with a great push started off with this outside bar down here. So that's a nice winner there. Generally, right? If you just look at Walmart, just look at these outside bars. Just look at them in the past. Look at this Nirvana, look at this outside bar, look at this one at the top of the range, this one. Simple approach, guys. Very much beautiful pushes on these outside bars. You don't have to be right all the time. Like we said, if you have a 2-to-1, you only need to be right 34 out of 100 times. So right now with Walmart, with this extended push, I wouldn't be chasing anything. I'll wait for another a Trading Wars setup to play it. So we had that inside bar last week that broke out today. So, I mean, this was beauty on all time frames. You can see on the daily, we had an outside bar, and on the weekly we had a beautiful inside bar. So that one, this is what we do, right? This is what I love doing, taking these inside bars. Beautiful breakout, nice winner. Congratulations to anybody that played that. Wet. What is wet? Not sure what that is, brother. D-Dog. Beautiful. So D-Dog is one of the picks that we're going to be swing trading. And right now, I'm going to go ahead and adjust the swing order. So we had that inside bar on D-Dog last week. So I'm going to go and adjust our orders right now for D-Dog. So just look out for the adjusted spreadsheet that I'll be sending out in a bit. All right. So I'm going to go ahead and work on a new order here for D-Dog. Still definitely like it. So this little inside bar range for the day, eventually we're going to break out of this range, either to the high or to the low. So we'll see. Okay. There we go. All right. Any other questions? Good. Can you demo sometime how to set up alerts in Tradingview for IBs and OBs? That's great. Yeah, I'll do a we'll do a separate video on that. So, that'll be a separate topic. I can show you guys how to do alerts. All right. Thank you very much for your time, Trading Wars Army members, everyone else. Thanks for being here. Appreciate you guys. Let's keep it going. There's still 4 days left in the week, so make sure that you don't do anything crazy, right? And make sure that you take your time. And if you need to size down, if you need to risk less, then definitely do that as well, because you don't want to give back the profits that you've been able to make in the last few months. You don't want to give it back in December because the trading is, the volume is low, et cetera, et cetera. You don't want to do that. Okay. Thank you very much for your time, guys. I'll catch you on the other side tomorrow. Take care.